What's going on? Afternoon, guys. Good afternoon. Good afternoon. It's Monday. We got a monstrous week. This is going to be really interesting to see exactly how this week is going to turn out. I think everyone's looking to see, all right, is this the bottom that we're looking at here for the broader market? Is this really just a fake out in this little rally potentially that we're seeing for the past few days here? I will just say one thing right now is be very careful, especially with earnings. That's really my bigger thing. I know that we all have that itch to want to play earnings. Be cautious about it. Woo, what's going on? LMT has been a monster. I know that stock has just been literally vertical for the past few days. I'll take a peep at it for you. We'll see what's going on with LMT. And I think we might have gotten a flow alert. That's probably what got Avery's attention in our Discord. But foremost, I just wanted to say again, be cautious with the earnings. Do not risk more than you can afford to lose. So if you're gonna do it, I would highly suggest you do a debit spread, whether it's a call debit spread, put debit spread. That's ideally what I would say. Now, the other key factor about this is also just knowing out of I want to say roughly what five big names that I can think of right off the top of my head: Microsoft, Apple, just those two marquee names per se. No, there's only going to be so many winners that are going to come out of this. So, especially if you're trying to force the upside, be very cautious. I would say be very selective. Do your research before you do any kind of lotto for earnings. That'll be the bigger thing that I also say as well. So, otherwise, I just want to kind of just throw out that risk management type of scenario there, give you guys the heads up what you should and shouldn't be doing ahead of a monstrous earnings week that's going to be lying upon us. All right. Otherwise, going into this morning's price action, we saw the VIX was up, we saw the bonds were up, we saw the broader market was also up as well. Now, at that given point in juncture, was basically finding out, all right, who's lying, who's capping right now this morning here. The VIX being up, the market should not be up, and with the bonds also being up as well, that was very much more suspect to the broader market also rallying as well, with that VIX being green. So once we started to see the market started to break out, we started to hit our head in some resistance, and then we particularly ended up getting a little bit of a morning pullback. And that morning pullback kind of gave us a little bit of an ease off of the VIX. But then, nonetheless, the VIX still stayed elevated. We still saw the market continuing to rally. So it is a little bit of a confusion here. If you're pretty much not understanding just the magnitude of everything that's coming into play this particular week, because it's going to be earnings are obviously going to give us a bigger directional move per se. So that's just something where I think the confluence is you kind of saw a little bit of a hurdle this morning in which you're like confused. Okay, why is the VIX up? But also the market's up, right? Who's particularly lying. But this was when you have to respect your levels. You have to respect particularly your patterns that you're looking at. And just looking obviously off of the hourly here, just to give you the bigger picture, you see the broader megaphone action that's taking place. You see the little descending channeling action that took place since Tuesday, since last week Tuesday that was. And you basically broke out and you saw a continuation off of that from Friday's price action. So once we are able to basically base above and hold that 200-day EMA off of hourly here, that's what literally gave us the launch pad to get a nice little trend day going, and that's particularly what you saw. Despite the fact that we had Netflix that was down rather most of the day, and I'll actually get into Netflix chart as well as to why you saw that bleeding out today. We saw Tesla with something related to the Bitcoin news that came out. We saw that down at some point this morning, 15 points rather early on in the morning. So that kind of gave me a little bit of an indication as the market started to steepening down to the downside here earlier this morning, giving us a little fake out per se. We saw Tesla was already down $7. Tesla was already Netflix was already down. Meta was already down, but Microsoft held with relative strength. Meta was holding with relative strength, and so was Apple for the most part. So that's just deciphering where your relative strength was, what was going to particularly give us a reversal off of that little morning dump that we saw. And that's particularly what I was looking at as well. And then also noticing the weakness off of semis this morning. But NVIDIA was one of the names that were able to pretty much rally back into the green territory. All right. Now going into tomorrow, what am I gonna be looking for? I'm gonna look to see if we do have any kind of pullback. Pullback wise, I'm gonna be watching to see if we can base off of this prior high from last week Tuesday. If we can base off of 275 half. Otherwise, if we get a breakdown below 275 half, I'm gonna particularly be watching for 373.64. We based off of that 200 EMA on the hourly here. I'm gonna look to see if we retest that support yet again, and that'll be building us for a broader base towards making the next leg higher that I'm watching towards the top of this megaphone. That would put us close enough in towards 386, 387, where I have my current supply sitting on SPY. All right. Otherwise, if we can't even hold or base off of the 200-day EMA, we could come back down all the way towards 371, 371 half ish, which would be a little bit of a trend line support off of this little green line that I have. That'll be about that 371, 371 half mark that we should end up tapping off of this trend line. And then I would ideally look to see if we hold trend. If we break the trend line support, then that's going to give me indication that we're likely breaking this overall uptrend to a larger degree. All right, so that's basically what I'm looking at for SPY. I can get into a few different names. I will actually get into that LNT name that you just mentioned real quick, and then I'll kind of run through a few names that kind of just caught my attention. Let's actually take a look at LMT. I'm gonna go off of the larger degree time frames, kind of give us a little bit more of a bigger picture. So bigger thing that you can see here off of the weekly is you can clearly identify there's a large little falling wedge, little flag action that took place. You saw that breaking out going in towards from actually since last week. Once this break broke over 427, we already had all-time highs pretty much set in sight, and I do believe that we're trending towards those all-time highs, given regardless of the market conditions more so. I do believe that we're going to trend up towards 480. If we're going to crack 480 on the first go, that's going to be the interesting part about this. But you do have some resistance sitting here right around 469 is where I have resistance. So I do see the fact that it ended up pulling back today. So 469, that's where I want to see for continuation going into tomorrow. If we can get over 469, I think we're going to see continuation. We can make headways towards that 480 within the later on in the week. Otherwise, if we do see more of a significant pullback off of this little intraday retracement, I would look to see if this ends up pulling back below 450. That's where I believe you're going to see a larger degree move to the downside. And I would be targeting particularly here 430, 440, well, 440 half. And then the next level degree, potentially retesting that flag breakout on as a support. I would be watching down towards 428 is my next level that I'd be watching for. All right. So I do love the breakout here though on LMT. I think someone called it out or brought it to my attention last week. Did I expect that kind of continuation right off the rip here? I kind of expected. I was more so looking for the pullback to get a retest off of this, but the impulse was just too strong, and I did not have that indication to want to chase it particularly. All right, but that's been a hell of a move for LMT. Let's see, AA, what's going on, my guy? Can you do Roblox and Starbucks? All right, let's take a peep at Roblox. See what's going on. A little bit of a flag kind of breaking out here, I will say. Weekly kind of got my attention off of this little Roblox flag that's going on here. Nice little breakout. I can potentially notice exactly why you had that little gap up that took place from last week. So you are basing here right off of the 20 EMA. I think that's a pretty solid sign right now. So bigger picture here that you want to see Roblox hold. As long as this holds this 40.36 AA, I think you should be relatively fine. You should see continuation to the upside. Otherwise, if you can't hold 40.36, I believe that should be your stop out or indication of whether, depending on your stop loss personally on that position. But 40.36 would be the invalidation level for this particular trend to hold. You got the nice flag breakout. You're kind of basing here to start the week above that 20 EMA. If you start to lose the 20 EMA, though, that's when you're going to be a little bit more on the concern. And I would say look to pretty much exit your position if you do lose that 20 EMA. So 40.36 would be my downside, my stop out for you. Otherwise, you're looking for the bigger breakout. Your overhead resistance off of the weekly here should be 47. So that's what I'm looking at for your overhead supply, overhead resistance that you're looking at. Now, if I get into a smaller time frame, get into the daily particularly, as I mentioned, that you're kind of basing down here. You see that you're basically basing on the lower time frame right off of the 50 EMA. I would look to see if you could particularly break north over 43 half. 43 half particularly looks to be that difficult level to break over. So if you can't break over 43 half, you see another rejection. That's going to be another indication where I say if you're in profits at that given point in time, look to take your profits or even to scale out particularly. Maybe leave a runner, look to see if you get the retest. But 43 half looks to be that very tough spot right now for it to break north of. But 43 half will be your upside resistance. And then again, like I mentioned, you're watching for the downside here roughly right around that 40.63 mark I mentioned. Look to that, for that to be your stop out on Roblox. All right. Let's see. The other name you mentioned was Starbucks. Let's take a peep. All right. So this one does not look pretty at all. I'm and depends whether you're. You mentioned you got puts on both. I'm assuming that's what you meant. Yeah, on both. So I do actually like the puts on Starbucks here. So that actually kind of contradicts a little bit. So the Roblox actually is basing right now. In order for your puts to pretty much particularly pay out, you're looking for the breakdown below 40.36. Like I mentioned, you're basing on that 20 EMA on the daily there. So that would be with the key level that you're looking for the breakdown for that to be paying out for you. Vice versa with Starbucks here, you already see the breakdown take place. You're not basing particularly, you already see the breakdown already take place off of the daily. Now, given the fact of potentially what your upside risk is here, you're looking to pretty much retest 85 half if you do end up getting a retest off of prior trendline support off of that pennant action, and that'll be your retest at 85.63 mark, and then that should be your rejection and your continuation to the downside off of that. So that's the bigger risk that you're potentially looking at, is if you already got in and maybe you even got in towards the bottom of the day here today, your bigger risk is retesting that prior trendline support as resistance. That'll be 85.63, and that'll be have to be where you decide, do you continue to hold? Are you able to manage that stop loss, particularly if this ends up rising up about almost $2? Are you comfortable with holding that position, or do you want to tighten your stop loss and then maybe re-enter if you do see it retrace up towards 80, close enough to 85 half? All right. So that's what I would look for with Starbucks. I did want to point out, I guess, a thing or two. Netflix, I wanted to point out particularly why you saw a red day off of this one. What I wanted to mention is that the reason why you saw that, you had the nice little ascending channel action that took place on Netflix. But the bigger thing was that you had the continuation off of earnings right into the 200-day EMA off of the daily. That's why you had that rejection. You're actually retesting the support of the ascending channel. So it's going to be imperative to see if this ends up holding at this 281 spot tomorrow, or do we see a larger degree breakdown take place? And then that's going to put us in sight potentially within the next, I want to say, week to 2 weeks coming. Are you going to start to gauge towards that gap fill to the downside, in which that'll be a beautiful one if it ends up do rolling over here? That'll be particularly very interesting. But I would not particularly force the downside here. I would wait to see if you get a breakdown below 273. That's where I would look to particularly target the gap fill to the downside. Otherwise, if you end up holding above that 273 spot, I would not force that situation to take place, because then I would hate for it to end up reversing on you. So wait for the confirmation of 273. Then you could potentially look to target towards the downside of the gap fill below. All right. Let's see what else. What else you guys mentioned? Prachi, how are you? Tom, can I check out INTC? Let's take a peep at INTC. I haven't looked at Intel on a hot minute. I will say a nice little inverted head and shoulders action kind of taking place here. Particularly, you had the little bit of a left shoulder. You had the head where you bottomed out from October 13th, and you started to curl up on that right shoulder. As you're a little bit in a indecisive moment, you did hit supply sitting right around that 27 half. So that's what gave you that retracement intraday here today. I would look to see, particularly as long as you hold 26.85 off of that daily EMA, I believe you should be particularly fine. Otherwise, if you end up starting to flirt with that breakdown below the 20 EMA at 26.85, and to give it a little bit of a leeway so that you don't get wicked out potentially, 26 half is where I would say is your stop out for INTC. As long as it holds the 26 half, and you can reclaim here by then tomorrow, I believe you should be fine. You should continue to base above that 20 EMA at that 26.85 spot, and that should particularly look to see if you can retest and get that breakout above 27 half. That's been current resistance, current supply, and then you're going to target gap fill above. That's going to take you up towards 28. All right, but a little bit of a tight wiggle room right now in terms of if you're holding this position right now, because you do have that. If we end up getting an intraday pullback, well, not intraday, but if we get a pullback tomorrow morning, that's where it's going to be a little bit of a decision making as to if you hold 26 half intraday, you can stomach that, you'll be fine, and you should be able to reclaim above that 20 EMA. But if you break down below 26 half, that's where you need to consider to end up cutting that position or not. All right, and that also would potentially be flirting with invalidating that inverted head and shoulders action. All right, Let's see what else you guys mentioned. Prachi, can I check on Baba? Let's take a peep at Baba. Baba just got slaughtered today. I mean, that thing is just disgusting. And to even look at Baba, I probably have to go to the monthly. Let's look at the monthly on this. Because I know, and yeah, we're actually flirting with near all time lows, potentially. Do I believe this is also going to be seeing those all time lows? I will be honest with you, I do believe that Bob is going to end up seeing all time lows. It's just going to be a matter of when. So I expect to see this below this 57.20 soon. That doesn't necessarily mean that's going to happen tomorrow. But the big level for upside here for this to take place, I would be watching 68 half. Right now, it's a little bit of more of a volatility range that you're sitting in right now. So if I were to tell you exactly when to go particularly long on Baba, because right now it looks like you're just in a knife catch. That's particularly what it looks like. If you're trying to end up getting into Baba down here, you're catching a knife that I would assume you at least at the bare minimum went out at least a month expiration because you are catching a knife here. But if I were to tell you where the ideal risk reward in terms of reversal taking place, I would watch to see if this can reclaim over 68. If you can reclaim over 68, then you have a shot of taking this back up towards 76, 77. Otherwise, if you can't reclaim over 68 here, I think that's the wiggle room that you're looking at towards the upside. And then again, like I mentioned, you're gonna flirt with 59 to break, and you're gonna look for a new fresh all-time low on Baba below 57.20. All right. But right now, it's a tight wiggle room that you have. That 68 mark is more so where I would say, all right, if we get over that 68 mark, I think we can start to build some reversal more so. Otherwise, even up towards 68, that should potentially act as your resistance, and that should end up taking this right back down to the downside. All right. And I will actually dial in. Let's see into the daily here. So it basically made a nice recovery so far into that day, I will say. I mean, it's not nothing. If you ended up buying calls on the day, you looked fine. You ended up filling a gap that dates back towards February of 2016, and that's a far way back. In terms of maybe making a scalp, if you're looking for maybe a day trade particularly, look to see if you can get over 64. 64 half is what I'm looking at for resistance. Nope, I take that back. It's 65. Over 65, then you can play it up to 68. That'll give you about a $3 wiggle room that you could potentially look to bank off of. Like I mentioned, 68 was your resistance. Over 65, you played up to the resistance at 68. Be cautious of a rejection at 68 to be wary of locking in profits at that level. Otherwise, if you break north of 68, like I mentioned, that should set you up for a larger degree of reversal to take place. Otherwise, rejection 68, you go right back down and you flirt with a brand new all-time low. All right. Let's see what else to take a look at. You mentioned CMG Chipotle. This thing has not been on my radar for a hot minute. A little bit of an inverted head and shoulders here, pretty clear off of the daily taking place. You are rejection off of that 50 EMA so far today. That's why we saw it regress. So watching price action over 15.56.38 tomorrow is going to be imperative. If you're going to be looking for a larger degree breakout, watching to see this break north over 15.81, over 15.81, I believe that's going to set you up for a larger degree move towards 15.1599 is what I have as your upside target. All right. If you end up breaking south, you can't reclaim over the 50 EMA over 1556. I'll be watching the downside here, and that'll particularly be below 1526 is what I would watch for, and you get a confirmation of breakdown below 1509 is what I'd be watching. All right. Let's see what else you guys mentioned. Tom, you're curious about Barrick Gold. Let's see what's going on with Barrick Gold. I will say a nice little recovery taking place. I don't particularly like the price action. I will say, I if this were to look a little bit more stronger, I may have said it looked a little bit more convincing. But this particularly looks a little bit more like a bear flag right now to me. I see a bear flag sitting up on Barrick Gold. It's not something that I particularly want to be in at the moment. That's basically setting up a daily bear flag to me, and I don't particularly like that. If I were to say if you were able to reclaim over 15 and a quarter, I would say then you probably have my blessings to maybe look for a larger degree move to the upside. Over 15 and a quarter, you take that and you look for the bigger breakout to take place over 15.47. Otherwise, downside, you're looking for this to break right back under 15.73, and that should set up to break down off of this little rising wedge bear flag action that's taking place on the daily. All right, let's see what else you guys mentioned. James, man, all of this looked like consolidation on SPY and IWM. What you say? I say it actually does look a little bit like consolidation. I don't know if you actually saw my chart on SPY when I started off the live here. But I actually have us sitting in a nice little megaphone action. We saw the nice little descending channel action that took place since last week, Tuesday. We saw the breakout occur on Friday. We saw the continuation basically off of today. So I'm watching a pullback here potentially if that does take place. 373.64 where we based off of the 200 EMA and then continuation to the upside here over 381.82 and that's going to set me up towards my supply at 387. All right. That's just to give you quick levels on the rundown. AA Car, isn't that Avis? I believe Car is Avis. Holy crap, that thing went bonkers. What the hell happened here? I know this is a squeeze sticker actually, but that is a hell of a move. I would watch a pullback here. Any kind of pullback, 217.5 looks like a decent pullback. Below 217.5, your next level support is 211. But looking at upside here for continuation, I can see this actually trading up towards 229. 229 will be my next upside PT on this. And let me actually see if I can dial up from the hourly here. Let's take a peep at the daily. Holy crap, that thing is a monster candle today. Wow. I'm sure the float on this is still insanely crazy and the short interest on it is absolutely bonkers. But yeah, 229 looks to be my next level PT on this one. Above 229 here, I believe you could potentially look to take this up to 244, but that would be very I would be very airy of that. I mean, I would look if you're not in it already, it's pretty tough to chase this. But 229 would be the level above 229. I believe you could take this up towards 244 as the next PT. All right. Above that, I that's absolutely crazy if this thing just continues to go vertical. That's absolutely nuts. All right. John, you mentioned Pfizer. Let's take a peep at Pfizer before we kind of wrap things up. Pfizer's actually been one of my favorite names, but just not as of late. It was pretty much a very fluid name that I actually traded. Watching this though, you had a nice little reversal. You had a beautiful break over that 20 EMA dating back towards Friday. That was a monster breakout that you had from Friday's price action. And then the fact that you got over the 50 EMA over that 45.35 spot on Pfizer, that was the big level that you wanted to hold. If you're looking for retracement, you're looking for a pullback, watch to see this hold and retrace back down towards 44.82. That would be the support. The potential next opportunity at a dip buy is at 44.82. And then looking to reclaim right back over the 45.35 that you broke over today. That would be particularly my setup for looking for the potential dip buy. Otherwise, if you're looking for continuation, I believe you're setting up towards the 100-day EMA and you're targeting 47.11. And that is also a little bit of where you kind of base off of. If I just draw the line, you can particularly see that's where you took a nice little reversal dating back towards March 2022. You had the reversal as well, April 2022, and then a reversal again, yet again, June 2022 as well. You had a reversal before you gapped down and you broke below that 47 in September. So I will look to retest that 47. It's going to be interesting to see if we can reclaim the 47 level this time around on Pfizer, or does that particularly act as a resistance and that takes us right back to the downside. All right. So base, you're looking to hold 45.35, and then you should retest a very marquee level at that 47 for potential resistance and rejection. It would be in my favor. All right. Other than that, though, kind of just ran through quite a few names there right off the rip. If you didn't hear me, like I mentioned, a lot of earnings on the horizon. Be very careful trying to play the earnings. Treat those lottos very small. Keep it your bankroll. Keep it going. Keep it solid. Do not try to end up lottoing about half of your portfolio into earnings, thinking that you're going to end up recovering whatever losses that you may have up until this point. So that'll be the bigger thing that I kind of just echo out to everyone. So be cautious about that. But otherwise, I will leave you guys with that as of right now. Let's see if the trend kind of continues here before we have the major names, particularly report their earnings. Google, Apple, Microsoft. I think those three marquee names are going to be on everyone's watch list right now in terms of how that's going to kind of sway the direction of the market. So keep that on watch. Let's see how we can end up playing on the back end of those. But otherwise, right now, try to avoid those premium hikes that you have going into those earnings. Try to float into other names here that are not necessarily juiced up as much as those are. All right. But I will leave you guys with that. Appreciate you guys joining us as always. Hopefully, I was able to help you guys with